Let's get across the latest on real estate investing now with Matt Scrizzy from LaSalle Investment Management. Great to have you on AusBiz, Matt. So tell me what you saw in the last quarter in the REIT sector.
Hi, Olivia. Thanks for having me here today. Well, what a difference a quarter makes. We had a great environment for the unloved real estate sector in the third quarter. We had progression on disinflation, easing financial conditions, and some pushback on sky-high valuations of growth equities, but that's unwound quite sharply in the fourth quarter. The Fed cuts that started in September have reduced recession risk, and the market's gone all in on U.S. policy changes being inflationary and re-accelerating growth, and that's bringing interest rates back to their recent highs. We think that it's not so clear that that's the case, that the risks are fairly balanced, and that this disinflation trend is strong and global. But in the meantime, real estate specific issues have really improved. We've seen banks really healing, and real estate lending is picking back up along with real estate equity capital formation. And the real estate sector, it's so much more than office. Everyone loves to talk about office because it hits really close to home. But even office concerns that have been gripping investors are fading, and high quality office is in high demand and short supply in a lot of markets around the world. And real estate fundamentals are broadly quite healthy. They're super strong in the data center and healthcare sectors. And we have an outlook for low supply being a tailwind for the core sectors like industrial, residential, and retail. And we're going to see that support the outlook this year for many real estate markets around the world.
And Matt, you were quoted in the Australian Financial Review newspaper saying that REITs are entering a new golden era. Why is that?
And we think it's a great opportunity now with the way the markets have played out in the fourth quarter, for investors to have another opportunity at buying companies to enjoy a golden era. We've seen over and over again in the past where concerns about the real estate sector and really high hopes for the broader equity market have laid the groundwork for multi-year periods of returns being very attractive for the real estate sector, and for many of these companies to make dramatic improvements in their risk and growth profiles. And we've seen it happen multiple times in the past, and we think that the pieces are in place to see that happen again here over the course of 2025.
Is this a story that is global? Is it also something that is impacting Australia as well? Would you see the same trend?
Absolutely. A lot of these, the key trends that have affected real estate companies have been very global in nature. We've seen e-commerce affect retail and industrial in different ways over the past couple of years, and that's creating some different opportunities today. In fact, we think that retail is really recovering quite nicely, and there's been some industrial markets that have gotten a little overbuilt. The data center sector is a truly global phenomenon as well, and office. Different levels of work from home, different levels of office use around the world, but it is affecting office. The way we're working post-pandemic is affecting office markets to some similar extent.
And there's renewed talk about global interest rates or fewer rate cuts this year. How will this impact the sector?
Well, we think that REITs have more than essentially reflected the reduction in interest rate cut expectations. What really matters for a sector like real estate, it is a very long-lived asset. It is more similar to long-term bonds or equities. And it's not all about policy rates. It's about long-term interest rates. It's about credit spreads. It's about inflation expectations. And we have seen a tightening of the mix of those factors we call financial conditions. We've seen a tightening of financial conditions, and that's hurt a capital-intensive sector like real estate here over the past couple of months. But it's not about what the Fed is going to do or not do in the next meeting. It's about the outlook for inflation, and we've seen this very strong disinflation trend play out really around the world, and we think that that's intact. And it's not going to play out in a straight line, but it is going to continue to play out here over the medium term.
And we know there are still structural problems in the sector stemming from the pandemic, particularly in office space. Do you see these issues persisting?
A lot of the pandemic-related issues that affected real estate sectors in different ways have really been unwinding and kind of continue to unwind. Some of the really high-flying sectors like industrial and storage, and some residential sectors and places where people were moving to, we actually saw those sectors get a little bit overbuilt, and now rents are coming down a little bit in some of those sectors. And meanwhile, on the other side of the coin, office, in some of the really great locations where people want to be, there's not enough new, high quality, amenitized office space with good public transport connections. And we're seeing rents actually increase in some of those places. So it's always specific to the locations of the buildings and the property types that we're talking about. But a lot of these pandemic issues have been unwinding for quite some time now. Actually, it's really interesting.
And Matt, what's your view on Airbnb? I had a guest yesterday who seemed quite concerned that it is helping drive inflation. What are your thoughts around it?
Airbnb had been as it relates to commercial real estate, had been a concern for the hotel sector as an alternative to hotels. We've seen that concern really fade. Many cities around the world have kind of pushed back on the availability and the pricing mechanics that Airbnb is able to use, and the supply of units. But we've seen it be also a lot more complementary and not really as directly competitive with hotels. So they're kind of really coexisting right now. I would say quite well in many markets. So less of a concern for commercial real estate sectors than it was a couple of years ago.
All right. So Matt, where are the best opportunities in real estate in 2025?
Yeah, we're seeing some really great opportunities in sectors that have taken a big hit in the fourth quarter, particularly interest rate sensitive sectors, sectors that have high long-term growth potential, or are a little bit more yield oriented, like sectors like cell towers and triple net lease. They have more than sufficiently reflected the move up in rates recently, and if we get an unwind of what's happened here over the past couple of weeks, those sectors are primed to perform quite well. And you've probably heard it from other participants that European markets have really taken it on the chin over the past couple of months. The mix of higher interest rates and U.S. policy changes have really affected European markets. And we see the same thing in the real estate sector. REITs in Europe and especially the UK are about as cheap relative to the U.S. as they've almost ever been. We see that echoed in the broader equity markets as well. And ultimately, we should see actually less, all else equal, less upside pressure on interest rates in Europe than other markets. So, there's some pretty good growth stories in Europe actually as well, and it's very unloved. It looks really cheap in a couple of different ways, and so we think that there's some great opportunities to pick up there.
And how about any locations in the APAC region that you may be keeping an eye on?
Well, we're always keeping an eye on the key markets for sure. Japan, Singapore, Hong Kong, mainland China, and Australia. Japan you could put in a similar boat with Europe right now. A little bit more interest rate sensitive, fairly unloved, has been beaten up here recently. You can buy some really good, really high quality real estate at rates of return that are still well above interest rates in Japan. Interest rates have moved up in Japan, but they're still very low in a global context. And we see a lot of private equity capital, focused there. And so REIT investors have an opportunity to buy real estate even more cheaply than private real estate investors would have the opportunity to do so in Japan. And I think many of us are focused on China. What can happen next there? It is a difficult commercial real estate market in a couple of ways. At some point, it's going to turn, and we're watching for that very closely.